Yo, what's up, everyone? How y'all doing?
Liftoff of mission 41D, the first flight of the orbital Discovery, and the shuttle has cleared the tower. Discovery's core computers now have primary control of critical vehicle functions.
Yo, what is up, everyone? All-time highs. All right. All right, how's everyone doing? What's up, Hungry Queens? How you doing? JB, good to have you. Alex stopped by for a minute. What's up, bro? Nice long unsold today. What's up, Bull Runner? How you doing? What's up, Barb? All good, man. Catch you in the next one. Troll Games, what's going on, man? Appreciate the kind words. Andrew Cameron, brother, how you doing? Kango, what's up? Hondo Poncho, what's up, man? It is a happy all-time high day indeed, guys. Indeed. It's been coming. All right, guys. Well, if you were in the Discord earlier today, you know we took this long out of the mitigation of demand, along with that weekly trend line. Or wait, sorry, this was not the weekly trend line. This is a different trend line. Oh yeah, this was the hourly trend line reclaim here. So how about that? What do we talk about on this channel all the time, guys? Right? Wyckoff accumulation model 2, right? Range, initiation, mitigation, continuation, Valhalla, right? Accumulation did its job, right? This is why this stuff is so important, right? 1, 2, 3, model 2 accumulation at the lows, SOS, reaccumulation, model 2, SOS, mitigation, continuation, Wyckoff model 2 here, initiation, mitigation, continuation. You'll see these over and over again. Now, don't worry, I'll get off the white charts, guys. I know it drives you crazy. We did just hit a spiral line up here, right? We'll go over some of the macro TA. We went over a little bit of it yesterday, but we hit pretty much all of our targets, right? We're looking to come to the liquidity here, then all-time highs. I told you guys we get above here, it'd be a quick move to all-time highs. Nice. We could cool off here a little bit, but there's not really any signs of that yet, right? Wait for structure. So what do we talk about again, right? So it's deciding, especially if you're a trend trader, right? It's deciding when you should be trading, right? Let's go back to our main chart, right? Our structure chart over here. It's the same thing that we've been talking about since way back here, right? Just want to make sure I get this in you guys' head, right? Never broke the 4-hour external low, which means that the week high was always targeted, right? Always targeted. A lot of liquidity in these highs. When do you take the trade? Well, when you break the internal market structure bullish, right? I mean, you guys see it, right? I mean, break internal market structure bullish, pull back to your order block 786, off to the races. You see the difference in this price action and this price action? This is a trend, right? How do we know it's a trend? Well, one way we know it's a trend, very simple, right? Just draw a trend line. Never broke, right? It's just a trend, right? It's an uptrend. Still trending. Nothing to worry about. You break this trend line, we can start talking about a correction, right? Till then, you're just trending. What's up, Mikey? How you doing, brother? What's up, Jam? All right. All right, we are going to do, we never do this. We're going to do a little bit of a shameless showing here because you guys know, right? Look at this. The last two buy signals on Cipher Matrix led to all-time highs. Strong trends to all-time highs. All right, go to the 12-hour. Right? The last two buy signals on Cipher Matrix have led to all-time highs. Love it. Love it. Absolutely killing it. Congratulations to everyone out there who has Cipher Matrix. Let's freaking go. It's been an amazing launch with you guys. It's been an amazing 3 months. I appreciate everybody who supported the early beta. Because of you guys, this is possible. Hell yeah. All right, that's enough of that. Let's go back to having fun. So, hopefully you guys are all long. Let's see it. Throw a 1 in the chat if you're long right now. Let's see it. I'm going to drink some water. Just Jenna? Jenna's the only one long? Alright, I hope that means you guys took profit up here. Put a 3 in chat if you took profit here. And that's why you're not long anymore. I'll accept this too. Alright. So let's talk about structure. So let's go to the daily. We just closed the daily candle. And what did we do? There we go. Love to see it. We broke structure on the daily. Right? So, what does this mean now? Right? Broke structure on the daily. That means that our strong low has moved. This was our strong low. No. That was internal. Sorry. This was our strong low. Down here in 98 on the daily, right? Not the 4 hour, on the daily. This is our strong low. We now have a new daily strong low. Our daily strong low is at 112K. So you should mark 112K, right? If you start closing daily candles below here, daily market structure will have flipped bearish. Now, obviously, we're going to be watching 4 hour structure, right? We're going to catch it a little sooner if you're watching Wave Cipher, right? But it's just somewhere to be aware of, right? Is that we generally wouldn't expect it to go below 112 on the daily now because that would flip to a downtrend, and then, you know, there's real possibility of the fun being over. So that's good, right? So we know that should this daily trend line break, right? Should this daily trend line break, we can expect like a 618 retracement, right? Wherever we end up stopping. So it's just something to be aware of. Now, what did we talk about before? So it's done the work of breaking the previous week high, right? But we still have our range deviation level to close above. It's like 120. Are we on? Hold on. Yeah. So like 126K. So if we can close like a 4 hour candle, preferably a daily candle, but I'll take like a 4 hour candle because it is technically 4 hour market structure as well. If we close a 4 hour candle above 126, 113, it's going to be a quick move up to 130. That 130 range. Now, we did this before, and I think that the range that we were looking for was somewhere between like 129 and 131 for like our next correction. But anywhere inside this range here is still technically SFP range, right? So if we come up here and we start closing back and we reclaim the range, we could come back to the lows, right? Now there's seasonality as an aspect of that, right? So there is August there's rate cuts next month, right? So what we want to see is a strong initiation out of this range, right? To be clear, I do not see anything bearish on this chart. I don't see anything bearish here. We just broke daily market structure. We broke up. I'm just saying that the one piece of the puzzle left is to close above 126, right? We are fighting the spider line right now. Let's see. So our new 4-hour strong low for a 4-hour market structure is at 117,980. So we do have a new strong low there, right? It was previously at 116. Now it's like 118, right? So if you're taking a trade on the 4-hour, you should expect to have your stop loss below 118. And there was an accumulation model down here, so generally we wouldn't, there's no like real need to come back down here, right? If we start closing below here, we're probably just going to have like a pullback maybe to like the decision block here, right? Or the decision block here. But everything's kind of mitigated on the way up. So we would prefer, if we do come down, to either come down just to 123. Like if we do have any sort of pullback, I would expect us to find support right here. Somewhere between like 120 and like 119. Once we start going further down than that, everything's kind of been mitigated and it would be kind of a fast move down. So I would say that your sweet spot for demand would be right between here. Man, what did we tell you guys down here, right? Down here we told you guys wait for the 50 to cross the 200 and buy underneath the 200. You guys see why we say that? So you would have got faked out here, right? So you would have taken big win, big win, big win. You would have gotten faked out here, small loss. It flips, you take it here, big win, right? Rules-based strategy, high win rate. Now, I'm curious, did anyone take any trades off this strategy in this trend? A strong trending market is the best time to use the strategy. Like, even on alts or anything. Is there any coins that y'all been finding success with? I could do TA for you guys right now, but there's really not much to look at, right? We're at all-time highs. What I can tell you guys is, here's your 15-minute low. 122, 312. Really, we're probably going to find support at the top of the range. If you start breaking this, you're probably coming down to the trend line. But other than that, I mean, it's up. It's up. Like, this volume isn't concerning to me. When to exit on the strategy? That's a great question. So, generally, if the moving averages are gapped like this, right, your TP1 is going to be the 50 EMA, and then your TP2 is going to be previous highs. Right? So you enter here, TP1 at the 50 EMA, TP2 at previous highs. Comes down, you enter again. If there are gaps like this, you can let it run, especially because they're so tight that if it crosses back, you're barely going to lose anything, right? But then you can just let it run to previous highs, right? And since it's a strong uptrend, you can leave a runner, right? So you take the trade here, you take 50% out at the 50 EMA or 25% out or whatever you want to do. Take the rest, take like 50% out at previous highs and then let 25% run. Comes back down, you can enter the trade again, take 75% out of previous highs, let it run, right? Same thing, crosses below, close the trade, crosses again, open it here, previous highs, so up here, take 50% out, let the rest run, right? It's a trend following strategy. If you need more information on that, go watch the one-on-one that I did with Caliphant, the helping a trader through common struggles, you're not alone video, the first one, and that'll walk you through that. Okay, so ETH, did ETH hit all-time highs today? That was our prediction from the stream yesterday. Oh yeah, did anybody take the trade from the stream yesterday? Yeah, did anyone take the Hungry, I think you took it, right? Trade from down here. Right? What did I tell you guys on stream yesterday, right? Treat this as a range until it's not. And remember what your job is? To take a long from the bottom of the range. Ride it up. Yeah, Max, it's a rules-based strategy, man. So, like, right, like, so you enter here, you take 50% out at the 50 EMA, you take, or like 25% out, you take 50% out previous highs, and you can let the rest ride, right? So I think what you're talking about is like, so again, you have to identify, is your market ranging or trending, right? So this is a good strategy to use when you're trending, right? When you break out of a range, you're trending up, you buy underneath the 200, you let it ride, right? If you're ranging, you're going to get chopped up. But even if you're getting chopped up, right? So let's say you buy here, you take 25% out of the 50 EMA, and then you close your trade when they cross. You close your trade down here, right? You get a small loss, right? Then they cross again. You buy underneath. These look like they crossed, but they didn't. They're just thicker EMAs, right? Come back up, take it out at previous highs, right? So that would be a win. The amount that you win here, even in a ranging market, is a lot more than you lost here, right? Because you took 25% out and then you got stopped out here, right? But obviously, right, like whenever these big trend moves happen, you make a way bigger win, right? Like if you buy here, you take 25% of the 50 EMA, maybe you don't realize the market's ranging, and then they cross like here, right? Like, yeah, you take a small loss here, but then you take a huge win here. You have to follow the rules, right? You have to be managing your risk. You have to make sure you know when to get out, when you're invalidated. But the good thing about the strategy is it gives you clear rules, right? Like, this is when I enter the trade. This is when I take profit. This is when I get out of the trade, right? So you're not going to be holding onto a trade hoping it's a winner, right? Or you're not going to be like whatever. And one class, if you're having trouble, Max, one thing I'll tell you is if you're trading like some low liquidity crap coin, right? Like if you're trading like Popcat or something, right? Like you'll see you're still getting wins with this strategy, right? Like you hit the target, right? Like you buy in here, you hit the target of previous highs, right? But what's important is like when you're entering, if you're trading like a low liquidity coin like this, like you can set a stop even though the strategy says to wait for the 50 EMA at like 2% just to protect yourself from like a complete dump shit show, no liquidity slippage nightmare, right? As long as like you can do a 2-to-1, right? So you could set like your stop loss down like 1.5% or something. You wouldn't have got stopped out, right? But you get the point. Make sure you protect yourself on these lower liquidity moves, right? But the idea is you follow the rules, right? And you have your take profit targets. You don't FOMO, right? You don't just buy here and get stopped out, right? You wait, retraces, you take the trade, right? And you'll see this on like on everything, man. Like, so you got stopped out on this one, and then it came up, and then he gave you another chance, and he's giving you another chance right now, right? So you will get faked out, but look at the loss here, right? You buy here, and you get stopped out like here, right? Whereas here, you buy here, and you make it to previous highs. So again, and like obviously low liquidity coins, like I should be using real coins here. Like AVAX. Yeah, like here we go. Like look, right? Like when a coin actually has liquidity, right? Instead of FOMOing here, right? You wait for the cross, you buy underneath the 200, TP1 at the 50, previous highs, right? Buy underneath the 200, TP1 at the 50, previous highs, right? And this is on the 5-minute. Like you can scalp this all day, right? Like Sol. Sol was a great example today, right? Look at Sol. Right? So instead of FOMOing, you get the cross. It gave you the test right away, right? But you'd have to be looking to see that, right? Earlier today, down here, right? Buy underneath the 200, TP1, TP2, previous highs, right? It's just a strategy to stop FOMO, but you have to follow the rules. You have to manage your risk. You have to make sure you're only risking 1% of your account. But if you trade this strategy long enough, I promise you it's extremely profitable, right? Like, why were we looking at Sol so much on the daily, right? Why did we know this Sol pump was coming? The exact same reason, bro. Like What did we see, right? The 50 crosses the 200 on the daily. Perfect golden cross retest on the daily time frame. This is when I told all of you guys, load up on Sol, pack your bags, long Sol, everything. Put a 1 in the chat if you made money off this Sol call, right? Like, this is the primo setup, is a daily golden cross retest. Like, it's not going to get better than that. I hope that answers your question, Max. So the idea is just take the trade when you see it, man. Like, and don't hesitate, right? Because you're gonna lose one, and then you're gonna hesitate on the next one, and that one's gonna be a banger. But if you follow the rules and you trade the strategy, go watch the video. Trading doesn't have to be hard. This EMA strat proves it. Follow the rules consistently, and you'll be profitable. What's up, Django? How's it going, brother? Okay, cool. With that being said, oh, you're good, Max. Yeah, if you need help, just hit me up on Discord, bro. I'll help you. Did ETH hit all-time highs? Yeah, so like we said, same thing that we said here, same thing that we said here, right? All-time high was not that far away, right? 12%, 5%, right? It's like it's likely going to all-time highs. Like, this is when I would expect a pullback, right? Because it happens the same way every time, right? Come up, hit all-time high, people sell half their bag, retrace, go, right? Unless you get like a daily candle that's like this, right? Then I could be convinced that we might not get that pullback, but generally it's the same thing, right? Because people accumulate underneath and then sell half their bag here. But I would say we're probably not going to correct before then, right? There's so much liquidity up there. If we do put, like, our all-time high pullback is probably just coming here. All right. What is that? Is that like 20%? Yeah. Yeah, my guess would be somewhere in here for the all-time high. So for ETH, we're probably coming up here to sweep the high and then coming back here and then going. Would be my guess. Up to our like higher targets. But of course, don't just short there, right? Wait for market structure, right? Preferably like 4 hour. You probably won't get 4 hour. Yeah. Yeah, I would say 1 hour. Wait for at least 1 hour. Yeah. Come up, yeah, like something like this. If we come up here, come down here, golden pocket, down. I can see that. If you're looking for shorts. But really, you just kind of be looking for longs down here, right? There's buy levels. All right, if there's coins you guys want to look at, throw it in chat. I can't really do much TA right now because, I mean, we're just waiting for something to happen, right? We're just sitting at all-time highs. All the TA was getting you guys long at all of these, getting you guys long at these accumulation models like the ones down here, and then this was perfect. This absolutely perfect Model 2 here. The Model 2s have been really, really clean lately. So yeah, just keep holding your longs. Ottercoin. Dude, is that a real thing? No. Dude, someone's gonna make that, bro, and put your face on it. Okay, so yeah, 15-minute low is here. That's where I'd set your alert. No, I know you wouldn't, bro. I'm saying someone's gonna, some dumbass is gonna make that. Yeah, have a great night, Alex. Happy all-time high, bro. Solana. Yeah, we can look at Solana. Right, Max, here we go on the 1 hour, right? So there's your trade on the 1 hour as well. Okay. Where's my levels on Sol? So Sol, we're at resistance on Sol. Yeah, I would say if Sol gets above 203 and flips it, you're going to 209. So on Sol, your 15-minute market structure. So you SFP your 15-minute low earlier today. So you're probably coming back to attack this high. So if you attack this high and then flip 203, yeah, you're going to 209. That's what I see. If you reject 209, you're gonna get a deeper retracement, probably 186. But I don't really see that. Let's look at. Yeah, I mean you're still in like the discount of the regression trend. Let's see. Yeah, you're still deep in the reversal band, still trending. 224 is the so 209 would be the next stop, and then 224 would be 224 is my level. So yeah, I can see 225. Yeah, I don't see any weakness in Sol. I mean, like, so last golden cross on the daily. I mean, it pumped from $20 to like 180, right? I mean, that's hopium, right? But I'm just saying, like, that is what happened the last golden cross on the daily. So, you know, we could find ourselves up here very soon. Yeah, I like it. I think things start accelerating very quickly when you come above 206. You come above 206, it's going to be very quick ride up. Yeah, man. Yeah, I like it. I like Sol. I think any retracement is a buy on Sol. Invalidate, like, as long as I think this low is pretty set. This low is pretty set. Yeah, I like Sol. You need a wave cipher coin? No, dude, we don't need a wave cipher coin. I'm trying to teach you guys how to make money trading, not take your money with a coin. I love it, dude. There's like not very many crap coins to chart today. We just chilling? Is everybody just long on Bitcoin, just watching? Yo, all right, all right. I'm gonna get in front of this, dude. If anybody makes that coin, I'm not associated with it. All right, I have nothing to do with that shit. And don't buy it. Yeah, guys, a little bit of mean reversion here before we go to the next pump. I mean, as long as, I mean, if you want like a 5-minute low, right? Our 5-minute low is like 123,200. But yeah, as long as 122,312 doesn't break, we're chilling. We're chilling. All right, guys. Well, we're partying. It's all-time high stream. Is there anything you guys want to go over? Anything you guys are struggling with? I'm happy to help you guys. There's not really much TA I can do for you guys right now. There we go. Sui? Yeah, we can look at Sui. Max, another thing I could tell you, bro, is like zoom out a little bit too, man. You know what I'm saying? Show some examples of Wyckoff 1s and 2s? Yeah, for sure. We can definitely do that. Yeah. Let me do Sui for Kelly first. Show some examples of Wyckoff 1s and 2s. So we have a Wyckoff reaccumulation right here. Yeah, for sure. So this is a Model 1 reaccumulation. You know it's Model 1 because the third hit comes lower than the other two, right? You have your break of structure here, right? Break of structure, the rug. The range deviation, right? Whenever you're going for like the Model 1 accumulation, right? Generally, you don't want to see a close below this, right? Because then it starts to look like, so this one not so much, but sometimes like this comes a little higher, and then you get your breakdown. And when you start closing candles below like your 25% range deviation, then you run the risk of it starting to look like distribution, right? So you have to, generally you don't want to come lower than this. That's why a lot of times whenever, I'm getting to it, Kelly, I promise. This is why a lot of times, like when you see me planning out a trade in the Discord, right? And let's say we have like an accumulation model, right? Right? And then we're coming down for our third hit. And let's say your order block is like here. That's why a lot of times you guys will see me like draw the range deviation fib, right? Or I guess the other side would be here, right? But draw the range deviation fib and then be like, hey, if you're going to enter, you can enter here in case it's a Model 2, right? But make sure your stop is below the range deviation. And then when it comes down here, I'll be like, oh, I really like this now. Like the risk to reward is insane, right? So generally, you'll want to make sure that it doesn't go lower than the range deviation level. And reaccumulation. So I was talking about this in the Discord with a couple people the other day. So reaccumulation can look a lot like distribution, but basically, so let's go over this. So the way that you can tell if reaccumulation is going to be distribution or not is after the jump across the creek, right? So this part right here will tell you. This right here will tell you if this is distribution. So if this is distribution, the retest of the creek will fail. That rally will fail. The next rally will fail. And then you'll lose the range. And you short here. Distribution. Right? Now, sometimes you like test, you come up, you fail, and then boom, SOS, right? But as long as you're like holding, what's important is that these lows hold, right? Your test should not come lower than your third leg of the accumulation, right? So like right now, we would assume that this is reaccumulation because so jump across the creek just means like the previous lower high resistance like that was set up gets broken, and it looks like a creek, right? So you can like there's some really good examples of this recently on Bitcoin. So like notice how this looks like a river, right? Jump across the creek. test, SOS, mitigate, or really this was SOS, mitigate, and then this was the reaccumulation model in itself. Then up you went. Let me go into this, or that, sorry, I was thinking over here. Yeah. So, I'm sorry, wait. So I had the jump across the creek here for this, which I still stand by because of the model, right? But in terms of like what a creek can sometimes look like, it's like this, right? You see how this looks like a river, like just lower, high, lower, high, lower, high, like a river, and then you change and you test it and you go. Like that's what a jump across the creek looks like, right? So this is actually a reaccumulation model, right? So you have your 2 hits, you come up, you put in a distribution model, you come back down for your third. This was a model 2. Come back down for your third. Where does the third one stop? I believe this was 3 minute. There was a lot of Wyckoffs on this move up. Like, it was pretty clear we were coming to all-time highs, but okay. On some time frame, there was this order block here. Like, it's not engulfed, but you get the point. And then you bounce off the order block, jump across the creek, mitigate, off you go, right? Back to what we're looking at series. So, with that being said, what part of the Wyckoff model are we in here, right? So this is the test, where you form your decision block. You come up here, you flag out, you go. So Kelly, I hope that helps. I think you're about to rocket ship up on Sui, would be my guess. It looks like a perfect reaccumulation model. Where am I wrong, Kelly, at this point? If we come back down here, you can safely put a stop down here. I think the risk to reward on putting a stop here is very high. Hope that helps. Because if we come back down to mitigate, right, if we initiate and then mitigate, we would expect to bounce from this decision block. Like, we wouldn't expect to come way down here. So, I mean, that's quite a, I mean, this is on the 4 hour, right? So it's like a 10% stop, but yeah, this already got, there's not really much in our way. I think we're coming for this liquidity. We're coming for this liquidity here. Yeah, like 3.4-ish, yeah. Yeah. Cool. That was a good question. All right, yeah, let's look at some more. Let's go to a clean Bitcoin chart here. All right, let's make this interesting. Let's contextualize it. We did do this before, but we'll do it again. Okay, so here's a good example, right? This right here was a little distribution model on the top side on Bitcoin, right? This is when we were up at like 109K, right? So distribution is just accumulation upside down. So if you have trouble spotting distribution, right, just invert your chart and look for accumulation. You'll see the exact same thing, right? Right? What happens? Jump across the creek, test, flag out, SOS, mitigate, continue. Get stopped because it's Bitcoin in a downtrend, right? But you get the point. That's like a distribution model. Now, if we're looking for an accumulation model, we don't have to look much further than the lows. You guys should start to notice these, and they should start to just pop out for you, right? So, and this is on the daily time frame. Now, if you guys were, I don't know if I had this Discord at the time, but if you guys were with me, hold on. It might have been in this Discord. One sec. Okay, no. I think it was in FG's Discord, but before we even came down for this third hit here, I was telling people wherever this stops should be the bottom, right? And that's just based off of like Wyckoff, right? Because we had our 2 hits here, 1, 2. Coming down for our third hit, what happens? Jump across the creek, flag out, SOS. It's Bitcoin, so this didn't really mitigate. Bitcoin, like, we got really lucky with this mitigation. Bitcoin normally doesn't do this, like, especially on the daily time frame. But yeah, you flag out, SOS, off to the races, right? So that would be an example of, is the trader accumulation on virtual still valid? Worth buying spot? Yeah, we'll look at virtuals in a second. Yeah, so that's like the daily accumulation model here. Like, when you start thinking in threes, you'll kind of see this stuff everywhere, right? So, comes up, forms a range. One, 2, 3. Jump across the creek, test, flag out. SOS, mitigation, continuation. So yeah, Bearded. So there's 3 ways that you can trade this, right? So the first way is planning for it in advance, right? And that's this, right? That's this, right? Understanding. So I'll tell you guys the secret sauce to trading this in advance, right? So it's identifying the first 2 taps in your what you think is accumulation or reaccumulation, and then it's knowing where your range deviation is and understanding that if this doesn't close, so actually we had this marked out off the daily here. Yeah. So understanding that if this doesn't close underneath the range deviation, then you're looking to get in, and you can front run that. You could have, this would have been okay to draw it as well, right? Because this is daily structure as well, but this is up structure, this is down structure, right? But this was more helpful because it worked better for this one, so we're still using it for this one. But either way that you have it drawn, the idea is the same, right? Whenever you come down for your third tap, if you close below here, you're out, right? So your risk to reward is really high, right? Right? Or maybe you front ran it down here, right? Your risk to reward is really high doing that. But the easier way to identify it is jumping in on the retest of the creek, right? So identifying, so you have more information on the creek entry because the model has formed, and then you get your jump across the creek of your lower highs. And then you're getting long here, and you're saying, hey, if we fail the creek and start failing rallies down here, I'm out. I'm out, right? But if this holds, and you start seeing it flag here, you're adding to the trade here, right? SOS, right? And of course, if you're adding here, you know, your stop is here by that point, right? But because you got the break of structure, right? But the point is you can take the creek entry as well. That would be the second entry, be the jump retest of the creek. Now the third entry would be mitigation after the SOS, right? So that's this entry. SOS, mitigation, continuation. Now the mitigation trade, a lot of you guys took. Like I know Barb took that trade, which is great. Some other people in the Discord took that trade, right? Easiest macro trade, right? Mitigation after a breakout of the range. And Bitcoin normally doesn't do this, so it gave you a really clean entry there, which is great. So you can also get in on the mitigation, looking for continuation, right? Now, the mitigation, my rules, is generally does not come lower than this decision block. Right? Sometimes on lower time frame, you'll do like, it's pinned to the top of the chat, Satoshi. Yeah, it's pinned to the top of the chat. It's free. Yeah, generally the mitigation will not come lower than here. Right? Now, sometimes on like the 5-minute time frame, you may get like a wick like that, but you want it to be a wick. You don't want it to be like candle closes. You want this decision block to hold. So let's apply this knowledge more locally, right? So let's go to the 5-minute. Let's look at some of these accumulations that we've been seeing. So for example, this was your clue you were going to get a pretty aggressive pump, was the fact that this, so we put in this Model 2 down here. You guys know, right? We've been looking at this. Put in this Model 2 down here. The mitigation on this Model 2 just came right to the top of the range, right? What does this look like? This looks exactly like the macro on Bitcoin, right? It just mitigates right to the top of the range and goes, right? So you can apply that to what Bitcoin is doing right now, right? It's pretty damn bullish, right? And I kept you guys bullish through this entire trend up, you know? Why? Because we look at 4-hour market structure. 4-hour market structure flipped bullish, right? Which is why the trend started trending again, right? Correction, trending. Correction, trending. If your best trades you're going to find are getting in on lows in the trend. Fastest way to make money, most aggressive way to make money, right? All right, back to what we were showing here. So here's an example right here, right? So on the stream yesterday, right, we were talking about this accumulation model here. 1, 2, 3, right? We're talking about this one. Now, if you remember on the stream yesterday, hell yeah. What did I say? I said mitigation is going to come in this block here. Right? So applying what we know, we have our range, jump across the creek, flag out, initiation, mitigation, decision block, up. Get long in here, stop loss under here, good to go. Does that make sense? Put a 1 in chat if that explanation makes sense. I'm going to drink some water. If you have any questions, throw them in the chat. We're having fun. We're partying. It's the time to ask. There's no stupid questions. If you think you have a question, a lot of other people probably have it too. One all day. Love it. Love it. I mean, hey, we got some of the smartest community there is. I know you guys are getting this stuff because I see you guys using it every day. I'd love to see you guys winning. Keep those profit logs coming. All right. Distribution. Let's zoom in. Distribution, right? 1, 2, 3 hits to the high. Break structure. Range. Initiation. Mitigation. Continuation. Get short here. Stop loss here. If this is distribution, we are not coming back into this range. If we come back into this is upside down accumulation, right? Here, this will probably help you guys. Distribution, what does this look like? Here, I'll put the creek in here. What does this look like? It's accumulation upside down, right? Just flip your chart over. If you find yourself having trouble to short, dude, just flip it over. Look for the same thing upside down. Do your TA the exact same you would, except hit the short button instead of the long button. Right? Okay. But yeah, so distribution. Model 2, right? Why is it a Model 2? Because all it does is come back and test the order block. Right? It doesn't make a new low. Jump across the creek, test the creek. Here's your creek entry. Stop loss underneath the creek. Up you go. Right? Or you can wait for confirmation. You get on the break of structure here, stop loss here. Either way, you can take the preemptive entry here, stop loss a close above 122.341. You can wait for the creek, take the retest of the creek entry, or you take the breakdown of the range with your stop here. Cool? Any questions about distribution? Yeah, they're going to be pulled from structure. So generally in the model, you can play with it a little bit, but the reason I pulled here is because I knew this was a range deviation, so it didn't create a new range. This was a deviation of this range already. So this one we would expect would also do this, right? It'd be different if the second hit created a new range, then I'd probably pull from this one. But, I mean, you can pull it that way. Your stop loss is just going to be bigger, right? So we could have pulled it like this, right? I would say when you're learning, I would pull it like this, right? So your stop loss is going to be a little bit bigger, right? So it's going to be like 122.5. But at the end of the day, it's not that big of a deal, right? 122.3 to 122.5. But, yeah, so you're looking to either get in at the order block here, right? This would be like you can put 50% of your trade on, 50% here, you're wrong here. Right? If you're going for this entry. If you're going for the creek entry, you wait for the creek to break, get in here, stop loss here, ride it up, the range breakdown, get in here, stop loss here, ride it up. Boom. Catch this breakdown. And then if you're really fancy, right? You close your short here. Right? You close your short when you see accumulation, you flip long, make tons of money, right? That's what the market maker does, right? So if you're trading with the market maker, that'd be what you're doing, right? Awesome, dude. This is way more fun for me than shorting than doing altcoin today for you guys. So if you guys have more questions, throw them in chat. I'm gonna drink some water. We can go over anything you guys are struggling with, literally anything in trading you want to talk about. Cuban, what's up, man? How you doing, bro? All right, guys. So y'all are good on accumulation distribution. Let's find one more distribution model here. Yeah. All right. So yeah, this will be good. So in reaccumulation, what you'll have, let me see if I can find one of those little image things. Let's see. Wyckoff. Yeah, here we go. Okay. Alright, so take this with a grain of salt because I just pulled this from YouTube, right? But this is like a reaccumulation schematic. So generally in reaccumulation, like up here, you'll generally have a distribution model on a lower time frame before you come down and finish your accumulation, right? Or up here, right? Somewhere you'll have a distribution model. So when we're looking at this, what do you see here, right? You have a nice little 3-minute Model 1 distribution, right? You have your break of structure in there. Right? You come down, you initiate out of the range, you mitigate, you come down. I guess this would really be your mitigation here, but yeah. You initiate out of the range, mitigate, continuation, and you come down for your third hit, right? So that's another little distribution model. So this is how your accumulation model looks, right? So you have your break of structure here. You have your 3 hits. Order block on the last hit, right? You have your jump across the creek. You technically, I would consider this a jump across the creek, but I would also consider this a jump across the creek. Either way, it doesn't matter because your decision block is here. Initiate out, mitigate, continuation. Right? The only difference between accumulation and reaccumulation is that reaccumulation comes from the bottom and generally has a distribution model after the break of structure. Sometimes it will just look like accumulation, but again, where do you focus your efforts on catching these? The jump across the creek. So in the Discord when we were talking about this, I was telling you guys, I called it here, right? And I was saying, if this test of the creek holds, this is likely reaccumulation to keep going higher. Now, if it had done this, failed, broke the range, mitigation, you can get short here, stop here, write it down. Right? But you're not shorting in this range. You can be longing, but like the way we talked about front running. But generally, you're longing at the creek or you're longing at the mitigation. And the mitigation is always going to be at the decision block. Well, it shouldn't go lower than the decision block. Right? Right? Decision block. Decision block. Cool. How do you deal with the trade when it is pumping, then starts to go down, then back up near your TP area? Can you give me an example? Did you take a trade today that you're asking about? Do you mean, okay, so let's say, oh yeah, I know how to answer that. So the answer is market structure, right? So let's say we're talking about this trade, right? We got in on the order block retest of the accumulation model, right? So if I'm getting long here, stop loss underneath the strong low, right? If I'm getting long here, when this level breaks, my 15-minute market structure now has a strong low here. So I can put my stop there, right? Then, whenever this level breaks, my 15-minute market structure strong low moves here. Then, whenever this level breaks, my 15-minute strong low moves here. Then, whenever this level breaks, my 15-minute strong low moves here. My stop loss is moving up, trailing behind market structure. Then whenever this level breaks, moves here, right? Then when this level breaks, it moves here. This level breaks, it moves here. This level breaks, it moves here. And then I get stopped out here, right? But you probably took some profit on this gigantic. Or no, sorry, no, you don't. Oh, this is such a perfect example. Okay. right? So then this breaks, moves here. Two bearish candles, break of structure. My stop loss strong low moves here. I get stopped out here. So we took a trade on 15-minute market structure. We took a trade at 113,000, and we're getting stopped out of that trade in profit at $121,000. This is why we trade market structure, guys. This is why we should understanding where your external market structure is, right? And this is why we trade market structure. Yeah, you didn't even pull the lows. Now, you can obviously leave a little bit of room for like an SFP, right? You can use your range deviations, leave a little bit of room. There's more complicated ways to do it. But in this example, we didn't even leave room for SFP. And we rode the long all the way up from 113 all the way up to 121. So if you're building like runners like at all these accumulation models, like let's say you took the 113 trade, you took this trade, maybe you took the mitigation trade, and you have all these trades, you can close all of them up here. At least like the runner part that you left, right? So that's what I would say. You want to make sure that you're using market structure, you're understanding where your strong lows are, where your weak highs are, and you're always what did we say in the course, right? If you guys haven't watched the market structure course, make sure you watch that, right? What were we saying about our strong lows? Strong lows are the friend that helps you move, right? Or they help your mom move, right? They carry all your big boxes into your truck for you. Right? And they load them all up and they don't drop anything and everything's fine, right? What about your weak friends, your weak highs? They drop the box and the box breaks all of your glasses. They're all shattered and shit, right? So you don't want to use like random internal untrusted highs or lows to guard your stop loss. You want your strong low guarding your stop loss. You want that G who never drops anything and always gets everything in the truck. That's who protects your shit, right? And whenever you trade that way, that's how you hold your trade all the way to here. And would any of y'all be mad if you closed your trade here? Nah, dude. It's where you should close it. Cool. Now, obviously, so we went over this a little bit yesterday. I still think this is really good. For all you guys who are sticking around to the end, we're just going to go over what I think is important. So we knew in this whole range here, right, talking about 4-hour market structure, we know that this is our 4-hour strong low, right? This is the friend that moves the boxes, right? In theory, if you had your stop loss underneath this strong low, and you went long at your golden pocket, right? Let's say you're a Fibonacci swing trader, and you're targeting the 1618. Which, wow, you can't make that up. Happens to be at 130. Yeah. So you have your little 3-to-1 trade, right? This is why we trade with 4-hour market structure. So what happens? So you take the trade at the golden pocket. You're in profit. Woo, it's exciting. It's awesome, right? Oh, no, I'm in the red, right? Luna, hey, come here. You're in the red, right? But your stop loss is protected by your strong low. So what happens? It comes back up and you take out the weak high, you hit TP1. Right? You could have gotten FOMO long here, FOMO long here, FOMO long here, FOMO long here, FOMO long here. It doesn't matter. If your stop loss is here, you're fine. Right? So understanding where your strong low is to protect your long allows you to ride trends, right? So let's look at this will be really exciting for you guys. Let's look at I don't know, it'll be exciting for me. But let's look at ETH. All right. So ETH 4-hour structure when we had this pullback, which also, if you understand where to pull your fibs from, everyone's pulling the fib from down here, but you understand structure. You're pulling your daily structure from here. Perfect golden pocket bounce, right? Okay. You put your perfect golden pocket bounce here, right? That was just something cool I wanted to show you guys. But more importantly, you break your 4-hour structure here. So you get long here. You stops underneath your strong low. You come up. You put in a high. You put in a low here. You break that. Your stop loss goes here. You break that. Your stop loss goes here. Now, generally, you'd be looking for like a close blow. So this is why we say leave some room, right? So there's a little, bear with me, there's a little bit of nuance here because they were trying to get leverage out, right? So if you were using your range deviation for your stop, you'd move your stop here, right? And then you come up, you break this high here, right? Your stop doesn't really move, right? But then you break this high, your stop goes here. Then you break this high, your stop goes here. Then you break this high, your stop goes here. No, that's not a low. Stop goes here. Yeah, you'd have to use a range deviation again. But basically the point is your stop goes here, stop goes here, and you get stopped out here, right? So by following structure with your stop loss, this is your first real break, right? If we take our range deviation, yeah, this is your first real break, right? So you get stopped out here, or you get stopped out here. Even if you're using the range deviation strat, you get stopped out here, right? So you entered the trade at 2,300, and you're getting stopped out at 3,400 because you're using strong lows as your stop loss, right? Or range deviation strong lows. Or a close. So if you're on the 4-hour, you can generally say a close below because you'll also notice that where are some of the best entries? This is why structure is so important, right? Some of the best entries are on SFPs of strong lows, right? Now your SFP of your strong low here. You got your SFP of your strong low here. And then you got stopped out. Yeah, so these two SFP trades are some of the best entries that you could have got into this ETH trend, right? Same thing goes with like knowing when to get out of your short, right? So let's see, where's 4-hour structure on this short? Here. Okay, so let's say you get short after the break of 4-hour structure here. You put in a high here, you break that low, your stop loss is here. All right, stop loss is here. You break that. You put in a high, you break that, your stop loss is here. You come back up, you break that, and then you're out of your short and you're going long, right? Trading with the 4-hour, if you learn like two things from it, trade with 4-hour market structure and study the EMA trade. And that'll save you from so much hardship early on, right? We're gonna go over we're gonna do the mic drop one more time here. So let's go to last cycle, right? So on ETH last cycle, everyone wants to know when the top is, right? You don't need to know when the top is. You just need to watch 4-hour market structure, right? So break the high, 4-hour lows here. You break your 4-hour market structure here. What were we? Okay, oh, that's why we're not on ETH/USDT. Hold on. Yeah, here we go. Okay. There we go. Yeah, like you break. I forget what chart we were looking at yesterday. It was a little bit cleaner, but we'll look at Bitcoin after this. But you break your 4-hour market structure here, right? Then you enter your short under bearish market structure. And you short it all the way down, right? Bitcoin, for example. This is just the recent top at... Yeah, here it is. It's still on here from what we were looking at yesterday, right? It's the recent top at 109, right? So you break your 4-hour market structure bullish, your strong lows here. You pull your strong low. You get your fib. You pull your golden pocket. And you take your golden pocket short, right? Back down to 74 or whatever, right? Right? So you don't need to know when the top is to take advantage of the top short, right? And then, like, if we look at daily, and we go to last cycle, right? Break your high, pull your low, daily bearish market structure, short the golden pocket. You guys see that? Like, you don't have to call the top. Market structure will tell you when the top is, right? And by waiting for this, you don't have to sit through, like, shorting, it goes back up, and then, no, you just get the big drop because bearish market structure came in, right? Same thing here. Let's go to, like, 4-hour at the second top, see if there's any... Yeah, so you pull your high here, you break your low. Bearish 4-hour market structure. Yeah, look at that. Look at how clean that is. Right, and you can realistically say you probably took the short down to here, right? But maybe you held it all the way to 20K, right? It's a 16 risk to reward just by waiting for market structure to break and then grabbing your golden pocket and shorting. And if you guys follow this channel, subscribe, ring the bell, I'm going to go over this stuff live. We're going to take the short live, and we're all going to make tons of money, right? Because we're not predicting the market. We're waiting for things to unfold, and then we're just reacting to market structure. Awesome, guys. Well, hey, congratulations to everyone who owns Bitcoin. We made it this far. It's been a super long journey. We're at all-time highs now. Pat yourself on the back. Hell yeah. Always an absolute pleasure hanging out with you guys. We got to do more live streams like this where it's just like teaching and less of that altcoin stuff. I mean, as much as I love charting altcoins for you guys, this is more fun in my opinion. But yeah, guys. If you're new here, make sure you subscribe, ring the bell, join the free Discord. It doesn't cost you anything. It's absolutely free. If you want to get Cipher Matrix, hit me up on Discord. Trade safe, guys. Much love. Wave Cipher out.